Thank you for tuning in to another edition of the VULCAN Report. This special intraday report is for trading on September the 28th, 2016. The time is about 6 minutes after 2 p.m. Eastern Standard Time. It's been a while since I was able to do an end of day video. As you all know, I am post recovery from being in the hospital, and I've been mad busy trying to play catch up, making up for lost time. With that being said, speaking of time, the time has come. My birthday is Friday, and I'm going to be taking off, but I'll tell you what. I have already extended the ability to lock in the low rates. They were supposed to have went up on September the 1st. I extended it in goodwill to my birthday, which is this Friday, September the 30th. If you have not already locked in the low rates for the trading course, the study course, and locked in your rates to the premium Black Ops trading room memberships, you're going to want to do that before the close of business on Friday. After Friday, the rates will be going up significantly. Why is that? The reason why the rates will be going up significantly is because we're going to be rolling out phase 2 of the study course, which includes the 2-bar Charlie method. So things are going to be changing drastically. Also, the trading room is filling up fast. We only have a select number of slots left, and because of that, unfortunately, doesn't matter how much money you have or don't have, we're going to have to be taking it on a case-by-case basis. Just because you have the money to afford the service doesn't mean you'll be able to get into the room. I'm going to have to evaluate each person on merit and how serious you are in learning how to make money on Wall Street. This is not fun and games. This is real life. We're trying to help people and help as many people as we possibly can. That is my goal, to help those who are on fixed incomes, unemployed, you name it, so that you can have a livelihood, so you can fend for you and your family. Especially those of you who are gold and silver stackers. You've been stacking all your life. You need to learn how to hedge your holdings. You got to do that. So if you're serious about learning how to earn a living from Wall Street and not being beholden to the man and punching in a 9 to 5 every day, then you need to hurry up and get on over here. Send me an email by the close of business on Friday, and I'll lock you in with the low price. But after Friday, like I said, they have to go up, because we don't have time to start from scratch when there are people who are serious and they've come long before you, and they're already well on their way to learning the methodology and getting ready for phase 2. So with that said, if you're serious, come on over, because to be honest with you, I'm not even going to be asking no more, because we got to move on to phase 2. The things happening coming down the pike, and you got to be ready for it. And if you're not, there's nothing I can do to help you if you're not already positioned. So with that said, let's take a look at some quick charts here. I'm finished my little sales pitch, if you will. All right, looking here at the NASDAQ, this is the TQQQ, ticker symbol, far left hand side. As you can see, this market's pretty much just been going straight on up. Had a little corrective situation here, but then it exploded to new highs. That's what the markets are doing right now, because the Fed has already pumped in so much liquidity into these markets, and I still don't believe that we've really seen the full effect of it. The low interest rates help keep the money flowing, and I just don't see the spigot being turned off anytime soon. I tell you what I do see, though. I do believe that we could see a March 2017 surprise. And what that means is I think we're going to see a repeat of 2000. For those of you that were around in the markets in 2000, then you will full remember the several interest rate surprises that we had in between meetings unannounced that shocked the financial markets. I believe that's what we're heading into now, because their back's been on the wall. They have so much pressure against them now, and they're going to have to do something crazy like that. They know they really can't raise rates officially without destroying the economy, but I think they don't have a choice and they're going to do it. I think they're going to announce, or I'm not really announced, but I think they're going to do an intermeeting rate hike. And I don't think it's going to be a quarter point. I think they're going to shock with a 50 basis point interest rate hike in between meetings. And I just want to prepare everybody for that possible surprise. Right now, it's looking like a very high likelihood that that's what's going to happen. Sometime between January and March, I believe we are going to see an interest rate hike surprise of 50 basis points, and I don't think they have a choice. And that's all I'm going to say on that subject. Let's move on to another chart. Let's take a look at these miners. Alright, looking at your gold miners, as you can see, you're in a negative post-wave position, but you're flatlining. There's no real follow-through on the downside. It's just riding the trend line here. That's all it's doing, is just riding the trend line. Nothing special, just riding it. After going straight up, now you're just correcting a little bit, and you're just riding the trend lines. Really not a lot to write home about. You're still in a bullish position chart-wise. All you can do is wait for any upward shock and surprise. Overhead resistance right now is at $30.57, and momentum's flat. Neither bullish nor bearish, just flat. Chart pattern, though, is still bullish, but in a corrective phase right now. So we need to know, is it going to go deeper into corrective territory and test the $23.36 support, or is it going to bounce and blast off from here? Who knows? We just have to watch and see what happens with this overhead resistance. Juniors are really no different. Same scenario. Overhead resistance at $50.40. But the one caveat is that the $43.92 support is actually holding. That's a good sign. So I say that right now, just going by the juniors, it looks like we have a probable bounce coming. But we still need to look out for the $50.40 overhead resistance, and momentum is flat. Neither bullish nor bearish. Mining shares, silver, same thing. Same exact scenario. Neutral momentum. Upside resistance at 52.15. Trendline support is at 44.13. And we're just chilling. It's not a lot going on here. Negative pulse wave, but no conviction. No acceleration of downward momentum. So it's neutral. Alright, looking at the junior silver miners, tad bit weaker. Support is at 1564. We're at 1584. Overhead resistance is at 1890. So this one, slightly weaker. Negative pulse wave situation, but it's still hanging in there on that trend line. Just riding the trend line now. This is the third week in a row that it's just riding the trend line. Need to see what transpires, and can it hold here and close above here for Friday. Looking at gold, you see the GLD ticker symbol here. Looking at gold, you see it's riding its support. It's not negative pulse waving. That's why this is interesting, because your underlying metal itself is not negative pulse waving like the miners are. I believe that's because the miners moved up so significantly. They were leading gold, and so now gold is having to play catch up. It's acting like it may want to correct, but it really hasn't, and it's going on. It's going on 2 months. We have not seen a correction. It's just dancing off the support lines. That's all it's doing. And right now, you got your support at 124.67, and it's just chilling, trading near the lows for the week, but still not taking out that support. Got to watch it and see if it holds though going into Friday. Momentum is showing like it's picking up on the downside, as you can tell here. But again, it's nothing that's cascading at this point. So this can be a little misleading because you haven't taken out the support. This would have more significance on the momentum side if the supports were taken out and we were negative post waving like we were in the minors. And then I would say that there may be something underlining here that is begging for a deeper correction. But because the metals themselves are not following suit with the minors are kind of leading the way again. I don't know. So it's still a big question mark going into next week and actually going into this Friday. All right, looking at your silver, same scenario. You see trading near the lows for the week, but still not breaking that support. So it's not really looking all that significant. It's just like dancing around support. Touches it, bounces. Touches it, bounces. It's just bouncing around. Is it going to eventually crack it? I don't know. It's just tough to say. This would have more meaning, like I said, if the supports were broken, but they're not. And even if it does break the first level of support up here, you still got major support at 1659. All right, so we still got a lot. I mean, that's a $2 drop, which is significant for silver. But overall, in the grand scheme of things, it's still bullish. It can afford to drop $2 and still be bullish. It'll be in a corrective bullish position, but it would still be bullish nonetheless. So just watch out for a surprise reversal, upside reversal. That's all I gotta say. It's been having problems at the 19 to $20 handle. Been having some resistance up here, but it won't take much for it to pop right through there and rally to 21 on you. So just keep your eyes open for that. That's all I gotta say. All right, can we pick up some clues looking at our inverses? Look at the JDST here. Is that an indication of what may happen? It was negative pulse waving. Mining shares started correcting, and then it is trying to do something. But look here, it's trading near the lows for the week now. So where does that put us? It's making me think that even though it's in a positive pulse wave position, because of the acceleration downside, and I mean we're still a little ways away from the support, but the way this is looking, the fact that we positively pulse waved and then reversed like this doesn't bode well for the bearish argument on the mining shares and the metals themselves. In other words, it's showing a pullback opportunity to get bullish. So you would have had to take your profits quickly on the JDST when it gave you. That's another thing too. If a stock's giving you $2-3 in a day, I mean you got to take that. You got to do what you got to do. So just something to think about there. All right, let's finish up with dust. Where will the dust settle? Well, again, same situation as with the JDST, but you got overhead resistance here now at 37.34, and now here you are retreating down to 32.01 at the lows of the week. Support's way down here at 27.06, still in a positive pulse wave, but because of the resistance argument here, I'm going to have to say that again, and it's in the cumulative cloud of death. You can't trust any price action in the cumulative cloud of death. You just can't. So yeah, it can explode and gap way up here, but what's the likelihood of that? You're in a cumulative cloud of death. It's hard enough to break out or break down from a cumulative cloud as it is. So I don't know. We're gonna have to really just wait and see. But I'm gonna say that it's looking like the truck's gonna be backed up, and people are gonna really pile in on the long side of the physical gold and silver, the paper gold and silver, and the mining shares. That's why I say that they're set to explode. Here is my technical argument right here for the upside blowout of these metals. So watch out for the crazy reversals. That's all I got to say. I think the risk is to the upside at this point. Could I be wrong? Absolutely. That's why we have a trading plan called the pulse wave price triggers. Even if your analysis is dead wrong, you can still make money if you have the pulse waves. I cannot stress you guys learning to trade the pulse waves enough. Anyway, remember, bulls make money, bears make money, but pigs get slaughtered. So remember to take what you can and give nothing back.